Good morning. It is July 15, 2024. It's just before 11 a.m. on the East Coast. This is Monday, and it's my birthday week. I'm going to leave it. Oh, actually, you can just see my birthday on my X account. It's just everything is public anyway, so there's no secret. So my birthday is later this week. I think it's Saturday, the 20th. But anyway, a lot to get to today. Some really good stuff. So watch the whole video. Again, this is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca. This is Goldfinger Capital on YouTube. I also have a Substack. Again, if you get value from these videos, if you like this video that you're about to see today, please hit the like button and subscribe to get all of my content. Trump assassination attempt. So it's interesting. The last 2 weeks, all we've been talking about is Biden's cognition, how senile he is, just how bad is it. Um, and then Saturday afternoon happened, and suddenly nobody's talking about that anymore. So just interesting how the flavor of the week, the flavor of the month can change so quickly. I don't have any major conspiracy theories, and I'm not going to delve into the shooting itself. Um, Aside from to just state the obvious, with that everybody else has stated, how did that happen? How did somebody get that close with a rifle? Obviously, that's the most obvious question, and everybody's asking that, and there's going to be a lot of searching for answers there. But basically, what we can take from the last 36, 40 hours is that suddenly Trump is even more popular. Biden has had an opportunity to be somewhat more presidential, to sort of call for unity and call for, calming down the rhetoric. I think Trump is going to say the same thing in his speech this week in Milwaukee. He's going to, this is an opportunity for unity in a country that's very divided. I don't know how much unity we're going to get, quite frankly, but at least we can have speeches about it and act like it might happen. But anyway, so Trump is more popular. And looking at predicted, so, Kamala had moved above Biden a few times in the last week or so. And now she's way back. So it's interesting how this is like basically the market saying they're just going to stick with Biden. They're not going to waste any other candidates on this election. It seems like the Democrats at some point have resigned that they can't beat Trump, which is pretty remarkable. Pretty remarkable. But, we're still 4 months out from the election, so a lot can happen. I mean, look at Saturday afternoon. A half an inch, a movement, and everything could be different, right? So the world is a crazy place today. But I think the market implications are we need to be thinking about a Trump win, and we need to be thinking more about the possibility of Trump winning in a Republican sweep. So they win the House and the Senate. And you can see the probabilities have gone up. The sweep probabilities are now better than 1 in 3. It's still not a probability, but the odds have gone up. And a Democrat sweep is a super long shot. It's 4% at this point. So, if we're going to bet that Trump is going to win and there's a possibility of a Republican sweep, what's the trade? And I think the simple trade is Trump's, like one of his favorite lines is drill, baby, drill. It's not his line, but he borrowed it and he's used it. So, natural resource sectors, so oil services, even coal is something you got to think about here. So, just the first three that come to mind: OIH, Halliburton, BTU, Peabody Energy. So, and then I look at the OIH chart, and this looks like it has bottomed, and we're moving up. I don't know if I want to call this a breakout, but hey, it's a pretty good start to the week. Very good start to the week, up 2.8%. So we talked about OIH the last couple of weeks. I told you I'm bullish on it, still bullish, and it's working. So let's stick with what's working. If you want to really get into the ugly, nitty gritty, dirty coal sector, BTU is probably also a good way to play it. The chart does not look as good as OIH, but um, this would be a beneficiary of a Trump presidency. Okay, so just an idea, throwing it out there. And if you want to get really super speculative, you might look at some of those, Alaska mining projects that haven't been able to get the EPA permit or the road permit. I know people are going to say no, those aren't even going to work under Trump administration. You're right, probably not. That's why I look at the share prices, but you can do your own research, and sometimes crazy market moves can happen. You got to be kind of quick on the trigger and be ready to sell those, because the reality is they're probably not going to actually get built. But if you're a trader, they can still work in the short term, right? Very clear to have a, distinction between, is this a long-term investment? Do you actually think this project is going to get built? Or do you think there can be a hype, sort of a pump that could occur on a news event like, you know, Trump having a second term, or a Republican sweep? Um, and be very clear that one has a much longer time frame than the other. The other one is very finite, and you've got to exit, you've got to sell, right? Um, and you can look at the Northern Dynasty chart going back 20 years, and how many times has that thing had pumps over the last 20 years where there were tremendous potential for short-term trading profits, right? But the key is you got to get in low, buy really cheap when everybody agrees there's no chance, and then sell when suddenly you're saying there's a chance. Okay, stocks are rocking again this morning. So you just generally, Trump generally more market friendly, lowering taxes. I mean, he's got some crazy ideas about taxes. And I don't care what people say that, oh, he might not be that good for gold. Come on, guys. Trump's second term is super bullish for gold. Super bullish. And look at where we're at. We're at 24.37. We're making new highs right now. Don't overthink it. Friday gold closed at a new weekly all-time closing high. A all-time weekly close for gold above 24.20 on Friday, and we're tacking on more gains this morning. So can I pat myself on the shoulder just for a second? Okay. Good job, Robert. You called this. You've been calling this shit for weeks. Yes, I got it right. Now we need to think. So as soon as you do that little victory lap as a trader and acknowledge, you got to acknowledge yourself for getting it right sometimes. You just do. It's very important, because if you never acknowledge yourself for getting it right, then what's the point, right? You need that positive feedback. That's how our brains work. But in the next breath, okay, what could change? What could go wrong here? What could have this suddenly not work, right? And I mean, I think the number one thing that comes to mind is just that for some reason the Fed is not going to cut as far or as fast as we might think right now. That would be the number one thing that could slow gold down. But at this point, with the non-farm payrolls data 2 weeks ago, then the CPI data last week, the market shrugged off the PPI that was hotter than expected, and we're at 95% chance of a September rate cut. And at this point, I think it's going to get locked in. I think we're going to see the Fed, rhetoric, the Fed speakers kind of really hint strongly that that's coming, but they might throw some doubt on the pace of the rate cuts. Okay, but right now it's like 55-45 that they're going to cut the final 3 meetings of the year. So we're going to start in September. We're going to cut right through Christmas down to 4.75% on the Fed funds, right? And here's um, markets pricing in the first cut on September 18th. And then by the end of 2025, they're seeing, I believe that's 7 rate cuts between now or between September and end of next year. 7 rate cuts are being priced in by the market. Citi says 8 by next summer. Okay. So food for thought. But if this forecast is right, then I don't know. You gotta stick with the gold trade. But gold is already pricing in some of this right now. The question is how much is being priced in, and that's actually a question that I asked at the end of my weekly blog post on my Substack and on CEO.ca. What is gold telling us about what is to come? Well, real rates are going to fall. That's one thing that gold is telling us. The Fed is going to ease. That's another thing gold is telling us. But how much is priced in at 24.20? And that's a very difficult question to answer. But clearly, this divergence, this is going to correct. Just the question of how far is it going to correct, right? Um, so let's talk a little bit about gold miners. So this is the Huey. I prefer, so if I'm looking at longer term, 5-year, 10-year, 15, 20-year charts, I prefer to look at the Huey Gold Bugs Index. I think it's just a little bit better than the GDX for tracking these things. And first observation, this has been a multi-year coil. You can call it a coil, you can call it a triangle, you could call it a pennant, but it's a multi-year consolidation. And now we're getting the first evidence, strong evidence, that it's breaking the downtrend that began in August 2020, continued in March 2022. So remember, these are 2 major local tops. August 2020, actually, that was a multi-year top, right, for the gold stocks. Then March 2022, remember, Russia invades Ukraine. Gold has a big spike for a couple of weeks, and then the whole thing fizzles. And the Fed is super worried about inflation. They begin the rate hikes, very aggressive rate hikes, and everything crashes from March 2022 to end of June 20. So it's like 3 months. Everything went to shit, right? So these are 2 very important points. And right now, the Huey is breaking that downtrend. So that's the first thing that's important. But really, I prefer horizontal breakouts, or much more than diagonal ones, right? So 325 is the big list. 325 and 350 on the Huey, those are the next 2 big levels. But, we're still in this uptrend from the end of 2015 bear market capitulation bottom. And now we're breaking the downtrend drawn off the 2020 and 2022 tops. This looks very constructive, technically speaking. Silver also looks fantastic. Um, moving up pretty much in unison with gold, quite frankly. And the gold miners, I mean, look at Newmont. Like, what a difference 4 months makes. Remember how hated this was back in February and March? Just vehemently hated. And look at the performance since. Biggest gold producer in the world, up more than 50%. And this is just, if you need more evidence of contrarian investing, embracing the hate. When everybody agrees, including people in the sector who make their living in the sector, hate a stock and agree it can't go up and it's the worst management in the world, that's when you really need to pay very, very close attention. It's flipped completely to the other side. But Now it's climbing this wall of worry, and there's some anticipation heading into earnings. So the Newmont and Barrick earnings coming up in a little more than a week are going to be really interesting. Did these guys have spectacular quarters? How good were their quarters? The further they run up into the quarter, the higher the probability of a sell on the news event once the results are announced, even if they are actually good. So that's something to be very mindful of. Mid-tier, Wesdome, Junior, Newfound Gold. So a lot of stocks are working now. A lot of gold stocks are working now. And I want to talk about, all right, so let's just briefly, China didn't buy gold in June. We're going to get back to the gold stocks and what's working. I don't think this is anything to panic about. I think this is standard stuff for China. They're just taking a break. They still need to buy a lot more. And so by most calculations, China's only got 5% of its reserves in gold. That is too low. They need to have 15 to 20% to be in line with their geopolitical peers. Ballpark number, that means they still need to buy another 2 million ounces. 2 million ounces. 2 million ounces. Do the math on that. It's a lot of money. All right, that's a lot of money. Um, okay, so I'm going to skip ahead and then go back. So let's talk about Tesla, the gold stocks, and the psychology of allowing winners to run. So I was talking about riding the trend in the gold miners, allowing your profits to expand with the trend. And like, why is it so typical that people want to just take a profit very quickly and sell? Well, from a human psychology standpoint, we want to be right. So when we're up on a trade, when we have profit, we sell, we're right. I did it. I made money. That's great. But when you sell and then 2 weeks later, the stock you sold is up another 30%, it flips to being, oh shit, I really screwed up. And you almost feel like you were wrong. Even though you made money on the trade, look at what you missed out on. Look at what you missed out on. Why didn't you stay in the trade? What made you sell, right? So the first thing is, well, you need to have a plan, and you should have a pretty reasonable, well outlined game plan for the trade. So did you follow your game plan? Was it just a very clear target level? That's where you were going. And once it got there, you were out. If that's the case, then okay. But from a trading standpoint, trend following and allowing just the trend to go in your favor for as long as it will is a very simple and a very effective strategy. If you back test a lot of trend following strategies, they work. They work over time, but they're very psychologically difficult for most humans to execute effectively because we have such a strong desire to be right. And selling at a profit allows us to be right. It makes us feel good about ourselves. The same reason why when we're losing on a trade, when the trade is going against us and we're unprofitable, we tend to stick in it because if we sell, we cement the fact that we were wrong. And we'd rather stick in it, but this is a very deep topic. It's a very, very deep topic. But let's just stick with letting profits run. So a couple of things. Couple of tips for letting profits run in a trade. So number one, you can take partial profits. You can sell half, you can sell a third, you can lock in something. The price of the stock went up, so it's even bigger holding than it was when you bought it, so you can take a little bit off the table. That's one thing. Another trick is to literally fool yourself into thinking, I'm losing on the trade. I'm losing. I don't want to sell now. It's you're kind of lying to yourself, but it's a funny technique that can work, that can just allow you to stick in it and not sell it. And also just asking yourself, why do I want to sell? What 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 information am I receiving that's telling me that I should sell now? And when you really look at that and you answer that question, for example, with Tesla, when it was breaking out here and I exited it, I was just thinking the resistance at 210 was too strong, but it hadn't really been tested yet. I was trying to anticipate, and I was so clever. I anticipated myself out of a huge winner. If I had held it 4 or 5 more trading days, it would have been a huge trade. It would have been one of my best trades of the year, right? Instead, I got out for whatever it was, 6% profit or something, and I left 20% on the table, 30% on the table, right? And we can do the same thing with these stocks that are working, that are working. And there's nothing in these charts, right? Like, yeah, it's overbought. It's overbought. We got to sell. It's overbought. But a bullish stock in a bull market will stay overbought for weeks. It'll stay overbought for weeks. And maybe just as a way to exercise that muscle, that letting profits run muscle, try a trade where you just force yourself to hold it. As long as it's in the green, as long as it's getting more green every week, just force yourself right down on the wall. Do whatever you need to. You can't sell it. You got to stay in it just to see how it feels. Just to see how it feels to hold on to it. See how far it can go just as an experiment. Okay. So, yeah, sometimes we just got to let the profits, we got to let the trade go. We can't be too quick to grab profits. And honestly, all my experience in trading, all the skills I built up over the years, this is still one of the hardest ones for me. I regularly take profits too soon. Um, Market's working. The Russell 2000 small caps. Look at this. So just look at my video last week. Small caps are not confirming, not confirming. And just look how the market mocks us all a few days later. Breakout on volume. So as bearish as some of us may want to be, as I want to be on the broader market, it's tough. I will say NVIDIA still has not exceeded that 140 level on the day that I made the video saying you'd be crazy to own it here. So we made a lower high, still in a very strong uptrend, but I must note that every top begins with a lower high. Okay, so we'll see. Another Trump trade. Glad I didn't forget this. Bitcoin. Trump, whatever. He's positive on crypto. He's wanting to win popularity by being more permissive of crypto, being supportive of Bitcoin. The market seems to think that Trump is good for Bitcoin. This is a tremendous failed breakdown, bear trap here. And remember that in this market environment in 2024, failed moves are becoming very prevalent, extremely common. You see this failed breakdown here back in early May. This one just a couple weeks ago was tremendous failed breakdown because it was staying under 56K for a few days. It seemed like support had been lost, and then boom, trapped a bunch of shorts there. So from failed moves come fast moves. From failed moves come fast moves. And we're seeing a fast move to the upside here in Bitcoin. So that's another gold, Bitcoin, oil stocks, oil service stocks, coal stocks, and US junior mining stocks that have advanced stage projects that need a permit. Those are that's your universe to play around with on the Trump and Republican sweep trade. But OIH is just, this is the simplest one, just simplest one, safest one. Holy shit. It just keeps going up. I'll just keep making this video. It'll just keep going higher, keep making more money. Um, MindMed. I took profits this morning on this one. Took profits here. Now, this is interesting because MindMed is moving up in sympathy with the Russell 2000. Remember, a couple weeks ago, they added MindMed to the Russell 2000 and Russell 3000. So it's in this index, and the index is pumping hard, and MindMed is moving up in sympathy with it. But I don't know. I don't love, it's not moving up as strong as it should be. It hasn't been trading great. But like, it's a stock I'll definitely keep my eye on for another trade setup. But I took profits this morning, so we'll see if I make a fool of myself like I did with Tesla. Take profits too soon. Um, on the positive side, support held last week. It got back above that $7 level, and there's a huge short interest in this thing. 27% short interest in MindMed. So if they can generate some sort of catalyst, the catalyst is probably going to be the start of their phase 3 trial, but phase 3 for MM120 is going to take more than a year. So I'm not sure how market moving that's going to be. The market is certainly aware they're moving into phase 3 for MM120. So I don't know what other catalysts are they going to generate. If they can generate something, they can create a short squeeze here. 27% short interest is a big short interest. Um, so I did a video, premium video on my Substack. Check it out. Subscribe. It's $8 a month. You get all my content plus my premium content for $8 a month on Goldfinger Capital. This is about a 42-minute site visit video on my visit to 2 projects in BC, Canada. So check that out. Nate Smith was also on one of my site visits to American Eagle Gold, and check out his Substack. This is an excellent report he did on this visit and on the company and why he's bullish. Very thorough, very thorough. So if you're interested in American Eagle, this is must read material, and definitely highly recommend subscribing to his Substack. I'm sure he put in a lot of time, dozens and dozens of hours on this, both in terms of his previous research to get to his level of knowledge and competence, and then to write this took a great deal of time. So show him some love. And he's been right, right? He's been right on American Eagle, right? I mean, he and I were talking about American Eagle when it was 9 cents a share. It's 72 cents here this morning, right? So he's been right on. Oh, Victoria Gold. Okay. To be clear, as I said in last week's video, I put on a small trade in Victoria Gold at 75 cents. What was it, last Monday? I think it was last Monday. Well, you can see it's kind of hard to see because it's so far down, but it started to move up on Thursday and Friday of last week. Well, and my premium Trading Lab subscribers know this because I posted it in real time during market hours. I sold on Friday. So I took profits. I bought it at 75, sold it at 86. What is that, 15%? Um, you know, I was looking for a bigger bounce on this update news on Friday. I figured that the company had an opportunity to sort of regain the narrative to some extent, that the environmental damage was minimal or nothing at all based upon water testing. It was contained, and maybe that they had stabilized any potential further slippage. And they could just give us an assessment of what the real extent of the damage is, and they could sort of regain a little bit of the narrative. Um, so the news release came out Friday morning, um, and it seemed reasonably positive, except for, I think, this part. So when I thought more about this, that the liner of the heap leach pad, um, the piping, the pumping, um, and they don't really say the extent of the damage, right? But we see the pictures of the site of the spill, and this is the heap leach area over here, and this is the area of the spill in yellow or orange. It's a pretty big area, right? So they don't say the extent of the damage, how much money it's going to cost or whatever, but the fact that the liner, the pumping and piping are damaged, that tells me that they are going to need permission from the Yukon mining authorities, the Yukon government, to resume at any later date. And they don't even know the timeline or the cost of any fix, right? So when you just think of that, minimum, this is going to be several months minimum at this point. And more likely, we're talking about, because of the seasonality, right? 3 months from now will be October. It's going to get very cold and snowy. I mean, this could be a year. So the more I thought about this, I said, okay, I'm out. Um, it's not bouncing very strong. The company's not really regaining the narrative here, you know, and I'm out. So I made money. I'm out. Simply, it was a trade. It was always a trade, and trades have finite periods of time, right? Then this comes out. I guess this was Friday afternoon. I'm not sure. It was either Friday or Saturday. Well, it says the 12th, um, but I didn't see it till Saturday. Um, but Northern Miner, in particular, this reporter, has been kind of on this story since its inception on June 24th, and clearly he got um, some inside sources inside the company from employees, and the article's not very good for the company. The optics are pretty bad. Now, I don't know the truth, but this reporter published this. Clearly, he thinks it's true. So I'll take it at face value. It's not good, right? Basically, it seems like there was an injury. I mean, he said he smacked his head a couple times. Um, I don't know. He went to the hospital. So the employee that was on the scene went to the hospital. He basically rode the pad down as it slipped. He was in a vehicle on top of the pad. And basically, he says the company kind of covers up any on-site injuries or downtime. So this is going to be a lot of government inspection, investigation. It's just a headache. It's a headache for the company, right? And as an investor, you just want to avoid situations like this. I mean, yeah, look, they've got multi-million ounce gold mine that was spitting out 170,000 ounces a year, and it's a 50 million market cap now. But how do they survive, right? So that's the big question, and that's the big sort of problem. So, how do they survive? Shareholders could easily get wiped out in the situation. Wow, look at gold just keeps going. I'm just gonna keep making this video. LIH gold will just keep going up. So that's that. Victoria Gold out of that trade, 15% profit. Anybody who is hating me on co.ca or whatever, eat your heart out. Okay, as a trade, I made money. Over. Next one. Okay, final one. The final two. Porphyry copper transactions slide from Hercules Silver. So I don't know if you can see this very well, but pull up the Hercules Metals. Hercules Metals. Name change, Hercules Metals. Pull up their new deck, their updated deck. They have a new slide. And this is kind of interesting. It shows 4 porphyry copper transactions in the US since 2010. That's it. There's 4? In 15 years, there's only 4? They might just be highlighting the 4 biggest ones, but there's not a lot of them. Like US mining, like the Southwest is pretty much all there is in terms of porphyry copper, right? It's usually just Arizona. It's Arizona, Arizona, and more Arizona. But the valuations that they highlight here, you can't see it here because the resolution is not very good. But basically, you're looking at like 1 billion tons of 0.38% copper equivalent for US $650 million 10 years ago. So inflation adjusts that figure definitely over 1 billion today, and that's for 0.38% grade copper equivalent porphyry. It's 1 billion tons, and it's in Arizona, so that's top tier. But 0.38%. Okay, there's a lot of details we don't know just based upon those figures, but that's an impressive number, and I really think that's what you're looking at. Like that's the prize. You make a new copper porphyry, discovery in the U.S. You're looking at $1 billion price tag, and that's like a starting point, really. Obviously, you need to draw the ore body. You need to show that it hangs together. It can't be super deep. Obviously, when it gets super deep, it changes the economics, the mining method, et cetera, et cetera. But this is the prize, and this is why I care about some of these little juniors, whether it's in Arizona or in Idaho. This is why I care. And whether they have a 20 million market cap or a 30 million market cap or 150 million market cap, there's still a lot of upside on the table if they can make a discovery. Um, so I thought that was interesting. So final topic, and then we'll call it a day. Gold's pulling back, so yeah, probably stop the video now. This video, watch it twice. If you care about porphyry copper, if you care about new discoveries in the US, if you care about understanding some of these deposits and the geophysics, watch this video. I paused it here at the 1610 mark because I really like this slide. I'm gonna keep it really simple and leave you to your imagination and your own research and due diligence. But notice this deposit, this Dos Pobres deposit. So this is the IPs, this is the chargeability, this is the resistivity. But I'm more interested here in the chargeability, and notice the Butte fault. So there's a fault right here, this deposit. And the strongest IP response is, I guess, just east or northeast of the fault. And notice that the strongest IP response is centered on the deposit adjacent to the Bornite zone. And then here's our Bornite zone. So the Bornite zone is right here, and the strongest IP chargeability is right here. So it's right next to it. And there's a fault right here. So just notice that and watch the whole video, for yourself. Different diagram on faulting. And it made me think of this, Hercules Metals, BIG on the TSX Venture. So we know that there's this bornite enrichment layer in some of these holes from 2023 drilling, most notably hole 2305. And there's a fault right next to that area of drilling. They say it's a thrust fault. And over here on this map, we can see it says Camp Creek shear zone. So what is a shear zone? Well, a shear zone in the upper plate is a fault, right? So there's faulting all along this area. And we don't know a lot of details or understand the faulting exactly. It could be this kind of thrust fault where uh, the hanging wall is up thrust and the footwall is down thrust. It could be more normal faulting, or it could be strike slip faulting. And I'm not an expert on faulting, but could it also be both? Could a block have been thrust up and then slipped, right? So shifted laterally and vertically at different times or at the same time. It's just interesting to me. It definitely complicates things, but it's also, I believe, a positive sign because uh, this kind of faulting, this kind of sort of convergent faulting is very prospective for intense hydrothermal fluid flow and porphyry formation, right? And this area is pretty heavily, there's a lot of faulting. There's faulting here, there's faulting coming across, there's faulting here. So you see there's multiple sort of layers of thrust faulting. And over here is a mountain, Cuddy Mountain, right? Formation of mountings comes from convergent plates. So you just add piece after piece after piece of the puzzle together, and a lot of evidence starts to add up that this is a very fertile location for porphyry formation. And the geophysics, which you can go through Hercules, the stuff that they've showed, um, and there's some pretty strong chargeability responses in different areas. The resistivity is also consistent with this deposit, the Dos Pobres, and we have bornite. We have bornite. We know we have bornite in multiple holes from 2023, right? So I just found this to be really interesting. I can't wait to get an update from the company. And that's it. That's it. Thanks for watching. Again, if you found value in this video, if you enjoy my content, you want to wish me happy birthday, hit the like and subscribe button, and have a powerful trading week.